What's up everybody, I am Jaspreet Singh, and let's assume for a second that this right here is you with a nice mustache and this right here is your friend with the braid, or as we like to call it in my native language Punjabi, a gut. So both you and your friend both make $4,000 a month, and then on July 16th, 2013, your friend comes to you and says, hey, let's take 1 month's salary, $4,000, and let's invest it in this thing called Bitcoin. This brand new cryptocurrency, this brand new investment. Your friend takes $4,000 and they put it into Bitcoin and they say, you should invest your money too. Now you look at your friend and you say, $4,000 is a lot of money. I have to work really hard to make this $4,000, so you don't invest your money in Bitcoin. Well, then some time goes on and now your friend becomes very rich. Your friend is able to turn her $4,000 investment into more than $3 million, and now your money turned into, well, nothing, because your money that's sitting in the bank wasn't earning you anything. So now you feel pretty dumb. Your friend is now a multi-millionaire. She was making the same money as you, she was working the same job as you, but now she's rich, but you are left with nothing. So now what you're trying to do is you're trying to figure out, how can I not make this mistake again? So now you're on your quest to become a multi-millionaire by trying to find the next Bitcoin. The only thing that's worse than you not putting $4,000 into Bitcoin, well, I guess there's two things that are worse than not putting $4,000 into Bitcoin when your friend told you to, is one, instead of putting $4,000 into Bitcoin, you decided to take that $4,000 and go to the Gucci store. But the second thing that's worse than not putting your $4,000 into Bitcoin would be you take this $4,000 now, trying to find the next Bitcoin, and you put your money into a crap coin. Now your $4,000 investment goes to, well, $0. Now you are in the hole. You were hoping to become rich just like your friend, but now you are broker than you were before. At least in this case, you didn't lose anything. I mean, you lost the opportunity cost of not investing your money, but now you actually just lost $4,000 because you invested your money into a crappy coin, hoping you'd get rich just like your friend. And now it didn't work out. Cryptocurrency has a lot of potential, but it's also speculative and it's very risky, and there's a lot of crappy coins out there, and they can be very attractive because you hear your dumb friends making a lot of money off of these crap coins, so you're thinking, why not me too? So what I want to do today is go over a couple cryptocurrencies that you should absolutely not buy, that way you don't fall into this whole scam of trying to throw your money into this get rich quick, hypey investment. I don't even feel right calling it an investment, but these are the things that you want to keep your hard-earned money away from. For starters, you should not hit that thumbs up button below. The 5 places where I invest my money are real estate, stocks, startups, cryptocurrency, and then physical commodities like gold. The reason why real estate is my favorite place to invest my money is because when I buy real estate, it doesn't just sit there. It produces a yield. It gives me cash flow. I buy a house or I buy an apartment complex, and then I put tenants inside of it. The tenants live in my property, and in exchange for them living in my property, they pay me rent every single month. So I buy an asset, and then it pays me just for owning it. If you go out today and you go out and buy some Bitcoin or Ethereum or some doggy coin, and you have this cryptocurrency just sitting in your wallet, well, it's not generating you any sort of cash flow. The goal is that your cryptocurrency will become more valuable, so the price goes up, but you don't actually make any money on your cryptocurrency unless you sell. But to solve that problem, you now have some cryptocurrencies out there that are created for the purpose of helping you earn a high interest yield on your cryptocurrency. That way, hopefully, you can earn some money, or some cryptocurrency in this case, while you wait. And the reason why this is so important and so attractive to some people is because, well, your cash in your savings account isn't earning you anything. This is a chart from bankrate.com that is showing you some of the best and highest yield savings accounts out there, and the highest yields that you're getting in a savings account is something like 0.5% a year. So if you take $1,000 and you put it into one of these high interest savings accounts, after 1 year, your $1,000 will grow to a whole $1,005. Now, if you compare that growth to the inflation that we're seeing, you actually will become poorer than you were before because your 0.5% yield isn't even close to keeping up with inflation. So those $5 that you earned are actually nowhere near enough to buy you what the new cost of things are because of inflation. So by keeping your money in these high interest savings accounts, you're actually losing money. But with cryptocurrency, there are ways for you to earn a 100% yield APY on your cryptocurrencies just by owning the right cryptocurrencies. Here's an article from The Motley Fool that's titled High Risk, High Reward, how to earn over 100% APY by farming crypto. You know the old saying, if it sounds too good to be true, it probably is? Well, that saying becomes very true when it comes to cryptocurrency, which is why the first type of cryptocurrency, which I don't recommend, is the cryptocurrencies that have the too good to be true APY yields. I'm gonna go over an example of this in just a second, but the whole idea is you can mitigate your risk if you can earn a high interest rate on your cryptocurrency, because now if you can earn a 50% return a year on your cryptocurrency in interest, well, now you have some cushion, because if your cryptocurrency goes down by 20%, you're still up 30% because you're getting a 50% interest yield. And now if you can earn 100% or more in interest on your cryptocurrency, well, you're almost guaranteed to make money because your cryptocurrency is generating you a yield and you also earn the cryptocurrency. Going back to this Motley Fool article, it goes over a few drawbacks of these high APY cryptocurrencies. The first one being that your cryptocurrency could lose value. The second thing is the interest rate that you're earning can go down as your liquidity pool becomes more popular. I'll explain what that is in just a minute. And the third point says that, well, some liquidity pools can be scams. Now, I already know what you're thinking. How in the world can somebody who's guaranteeing me a 300% interest rate a year be a scam? I mean, it says that they're gonna pay me on their website. The way that you earn these types of high interest rates is you have to buy a cryptocurrency and then you put it into something called a liquidity pool. A liquidity pool is essentially a pool, a group, where you take your cryptocurrency and you put it into this thing. That way now there's more liquidity of this cryptocurrency floating around. So you buy this cryptocurrency, put it into this pool, and now you earn interest because you're selling your short-term ability to sell your cryptocurrency. The reason why you get such a small return on saving your money in the bank is because, well, it's so low risk. The less risk you have, the less yield that you get. I get a higher return on my real estate investments because it's more risky to go out and invest in real estate than it is to just keep my cash in the bank. And I get a higher return, or at least I'm looking for a higher return when I invest in startups because, well, that's even riskier than investing in real estate, and there's a higher chance that the startup that I'm investing in can fail and go bankrupt. So I'm looking for a higher return to help balance out some of that risk. With these high interest paying cryptocurrencies, it works the exact same way. The article says that pools without much value need to offer high interest rates to attract lenders. So if I have a worthless investment and I want you to buy this investment and then put it into this liquidity pool, the only way that I can get you to do that is by offering you a very high interest rate, because that's going to attract you to want to buy my worthless investment. So now you see this very high APY, and now you come and buy my worthless investment, you put it in the liquidity pool, and now I'm going to pay you a 100% yield or a 500% yield or maybe a 1000% yield of your worthless investment. So you're getting 1000% of nothing. See, what you have to remember is if you have a 1000 nothing coins, things that are worthless, and it pays you a 1000% yield, and now you own 2000 nothings and it's worthless, well, chances are the value of each one of your nothings becomes less. And even if it still has some sort of value, the only way that you can actually retrieve this value is if you take this 2000 nothings and then you convert it to something like, I don't know, dollars. But in order for you to convert these nothings into dollars, you need people with dollars who want to buy your nothings back from you. So if you go out and you find some of these too good to be true APYs, you find a cryptocurrency that's gonna pay you 1000% a year, you go and you put some of your money into it, hoping that now you can double your money very quickly, because even if your cryptocurrency doesn't perform that well, who cares? You're earning 1000% a year in interest. Now you're starting to see that you're accumulating more coins, you're starting to have more cryptocurrency, but then in order for you to actually have something tangible and usable, you gotta take your nothings and you got to convert it back to something with value. Maybe you want Bitcoin, maybe you want dollars, maybe you want something else. But in order for you to do that, you need somebody with something willing to give you something in exchange for nothing. For example, there was a company called Iron Finance, which used to have a currency called Iron, which used to offer an APY of over 1,000% a year, over 1,000% interest a year if you just owned their coin and then you staked it against a different cryptocurrency. This is their tweet from June 6th, 2021. Their caption is best APYs as usual, and then they would mark it that if you had this Iron to USDC, the USDC coin, then you would earn over 1,000% a year, and if you had their Titan coin and you did that against Matic, then you were earning almost 3,000,000% APY a year. Remember, the reason why you have to offer higher interest rates is because you have no value in your underlying product. It's a pretty attractive offer. I mean, if I took $1,000 and I can get a 1,000% interest rate on my $1,000, that means my $1,000 investment were turned into $10,000. And if I invest it into a good cryptocurrency that goes up in value, then yeah, I earned my $10,000 in interest, but then I also have a more valuable principal in my investment. Well, on June 16th, 2021, 10 days after that original tweet that I showed you, Iron Finance came out again and they tweeted, "Dear community, comma, please withdraw liquidity from all pools. We will share a post-mortem as soon as we have a better understanding of this bank run." This is what people were hoping for. They were hoping to 10x their money in a year by doing nothing except just holding the right cryptocurrency, and they thought they were geniuses because they found this opportunity before anybody else, because if you put your money in the bank, you would earn a 0.5% a year interest, but if you do this, you can earn 1,000% a year. And even if the cryptocurrency value goes down a little bit, what's the big deal? You're still earning 1,000% a year. Well, then it ultimately collapsed, and now you own a whole bunch of nothing that nobody wants to own, and well, now you have nothing. This is one of those things where you really need to turn on that logic portion of your brain and understand, what does it take to earn a 1,000% yield? Think about it in business form. If a business wants to grow by 1,000%, it takes a lot of effort, it takes money, it takes time, it takes employees, it takes innovation. And for you to just try to earn 1,000% yield by doing nothing except owning a cryptocurrency and hoping that it's going to pay you 1,000%, something here seems like it's too good to be true. This doesn't mean that you should avoid trying to earn interest on your cryptocurrencies. I mean, I have stable coins and I have some cryptocurrencies that are paying me interest, but I'm not looking for the 1,000% yields. I'm looking for decent yields where now I'm gonna earn a return on the cryptocurrency. That way I can get paid while I wait. I use a platform called BlockFi. They're a sponsor of Minority Mindset. You can own stable coins, you can own cryptocurrencies like Bitcoin and Ethereum, and then they will work to lend out your cryptocurrencies and they will pay you interest. I mean, BlockFi is not a bank, so they're not FDIC insured. There's a chance that your cryptocurrency could go down, and there's a chance that you might not get the interest that you're looking for if people stop paying. But compared to the relative risk of investing your money here, trying to get a 1,000% yield, I would say that it's significantly less risk. But if you want to learn more and see how you can start earning interest on your cryptocurrencies, I'll put the link to how you can do that with BlockFi in the description below. Minority Mindset is a paid partner with BlockFi, so if you use them, we will get compensated, but there's no additional cost to you. So if you want to learn more and see you can start earning interest on your cryptocurrencies, I'll put the link to how you can do that with BlockFi in the description below. The second type of cryptocurrency that I don't put my money in are the no value meme coins. Cryptocurrency itself is a speculative investment. I don't have cryptocurrency as my whole investment portfolio. I have an established real estate portfolio, an established stock market portfolio. I'm investing in startups. I have physical commodities like gold. I own physical gold. And then I have cryptocurrency. This is a piece of my portfolio, more on the speculative side. But now when you look at meme coins are a speculative speculative investment. The value within a cryptocurrency comes down to two things: the usability of a cryptocurrency and the network. The usability goes to what value does this cryptocurrency actually provide? What can you use it for? Is there some value in the blockchain? For example, something like Ethereum gives you usability because you can build NFTs on top of Ethereum. You can build the whole DeFi, the decentralized finance space, on top of Ethereum. You can do smart contracts on Ethereum. The network side really comes down to how many people believe in, own, and want to use this cryptocurrency, because now let's assume that you have a cryptocurrency that has a lot of use and a lot of applications. But if nobody knows about it, if nobody cares about it, and if nobody owns it or uses it, well, it's pretty worthless, because you need people that actually own that cryptocurrency. Now, if you have a cryptocurrency that has a network, you have a lot of people that own it, that talk about it, that believe in it, and that like the cryptocurrency, well, then you can develop some use, because if a lot of people own it, you have millions of people that are behind this cryptocurrency and they own it, well, now you can exchange this cryptocurrency with one another and buy things from each other, so you create use through the network. But then you have some meme coins that don't have any use, that don't have much of a network, so they're really kind of just worthless on both ends. Now, your most popular meme coins are your Doge, aka your doggy coin, and then your Shiba Inu coins. Now, while those are very highly speculative, they're meme coins, they are starting to develop some network and some usability. I personally don't like the idea of investing in meme coins because I'm an investor. I don't like to invest in super speculative things like that. Obviously, cryptocurrency is a speculative investment, but I don't like to put my money into things where I'm just hoping that this will somehow derive some value. I like to actually look for value. That's where I put some money, where I see this usability. This is the most important thing for me, and obviously this is important, but I also want to invest in things that have usability. But those two meme coins, the doggy coin and your Shiba Inu, have started to develop this and this. Doggy coin started off as a joke. Even the developers have come out and said that. But then a lot of people got excited about doggy coin because of, well, Mark Cuban and Elon Musk. And so you built this big network of people that loved and believed in doggy coin, hoping that it would go to the moon, or if not the moon, Mars. And so you have this big network of people, and because there was a big network of people, then you started to see a little bit of usability, because then people who believe in doggy coin could exchange doggy coin with each other. And now you can even buy Tesla whistles with doggy coin. Now obviously that is not much use, but there is a little bit of use through this network. Again, it's a meme coin, highly speculative. It's a speculative investment. And same with Shiba Inu. Shiba Inu is actually a little bit different because you have a lot more usability. Shiba Inu was created as the doggy coin killer, but the whole idea with Shiba Inu is it was created with the idea of having actual use. The Shiba Inu technology has a place where you can exchange NFTs, you can build NFTs, and you can do other things on top of the Shiba Inu platform. And because it's so popular, you have a network, so you have some usability here. Again, it's a meme coin, but then you have the other meme coins, because you have the people that say, oh man, I missed out on Bitcoin. I missed out on doggy coin, so I don't want to miss the next one. So you have this whole era, this whole genre, I don't even know what the right word is, this whole like tidal wave of these new meme coins, which are supposed to be the old original meme coin killers. I mean, you have things like the Fluffy coin, which is the cat version of the doggy coin, and then you have the Tiger King coin, which is the Tiger King version of the doggy coin. These no value meme coins are exactly that. They're no value. And when people have a lot of money and they don't know what to do with it and they're hoping to see them get rich quick, that's when you'll see money flow into these crappy coins, because people are too rich. But then when things slow down and people need their money, what do you think they're gonna sell first? They're crap coins, because these are things that have no real tangible value. Now, if you wanna have fun, that's one thing. But I don't like to play with my money. I want to actually invest my money and see a return on my money. If you want to have a teeny tiny little bit in your portfolio where it's super speculative, things that don't make any sense, maybe it will go to the moon, maybe it'll go to the Mars. Okay, but just understand what that is in your portfolio, where it's like gambling. You're going to Vegas, and this is money that you may see go to the moon, and it may be money that you just completely lose. So you have to understand that, especially when you're investing into these no-value meme coins, that there is a very, very, very large chance that you are gonna see your money go completely away to zero. And if you're not comfortable with that, then you should not be putting your money into these things right here. There's a pretty simple recipe that you can look for if you want to know what is going to go bust. The first thing that you got to look at is hype. Now, a lot of times when you see a very crappy investment, people will try to make up for the crap with extra hype. The second thing you gotta look at is the hope of getting rich quick. This is where you see a lot of people that will buy into it with the hype and say that this thing can never go down. Everybody keeps talking about how there's so much potential, so much upside, but one thing that they never talk about is the risk. And if you try to bring up the risk, they will always tell you, what are you talking about? There's no actual risk here. That's not possible. If you don't believe that there's any risk, chances are it's a piece of crap. And the third thing that you have to look at is that there is no real value. No real value means there's no usability or there's no network. There's no value behind the technology. People are just buying it for the purpose of trying to get rich. People are just buying this thing hoping that it's going to go up in value. If there's no real value behind it, well, when money starts to become tighter, what do you think is going to go away first? The things that have no real value. You want to be investing in things that have actual value, and then when you have these three things combined with cheap money, easy debt, well, that makes your bubble even bigger, and now you have a ticking time bomb. I've said this before, but cryptocurrency is very speculative. You can see things go up and down very quickly, and you're gonna see a lot of cryptocurrencies get completely wiped out. But the ones that will survive are the ones that provide actual value. And if you really want to be an investor, you gotta understand, okay, one, cryptocurrency is speculative, and now if I really wanna just invest my money, you wanna invest your money into things that provide value, that will be around for the long term, and that will continue to provide more value in the future, not just things that are gonna hopefully make you rich quick. If you buy in at the right time and you sell fast enough, sure, you can come out with a profit, but the chances and likelihood of that happening are slim to none, which is why most people who do that end up bust. What's up, everybody? If you want to continue building your financial education, I linked a relevant video here that I think you'll love, and as an added bonus, I have a free guide on how you can start generating passive income that you can download and read for free. All you gotta do is click that button below.
The price of everything you want to buy is going up, but the inflation rate is not a scalar, it's not a single number.